Hey guys, I'm Doug Massi, and today on Final Expense Trainer, we're going to be talking about mortgage protection versus final expense. Now, if you're thinking, well, shoot, Doug, you're the final expense dude, so of course you're going to be biased. Well, yeah, you're right, but with good reason. You see, let me explain something. What you may not realize is that before I even heard of final expense, I was already a mortgage protection top producer. Coming up next. So if you haven't subscribed to our channel, I'm gonna ask that you go ahead and hit that little subscribe button below, as we're putting out new videos all the time. Also, if you click on that little bell looking thing that's at the bottom next to the subscribe button, we're gonna notify you every time we put out a true final expense training video. If you'd like a copy of the last will and testament that I leave with every one of my sales, along with the living will kit, stick around to the end of the video and I'll tell you how to get one of those. So just to give you a little bit about my background, when I first got licensed to sell life insurance, I was actually recruited by the Hartford. And so back then, I had a 60-point commission. I was required to purchase at least 10 leads a week at $30 a piece, and inadvertently ended up leaving the Hartford to go elsewhere and then coming back. And so what I did was, when I say I went elsewhere, I actually went to one of those big IMOs that do that thing where they start your contracts really low and they offer you the big dream of getting rich. The thing I found that was difficult with being a part of one of those really big IMOs that tell you to recruit and build your agency is that it's really hard to recruit anybody with common sense when you're trying to offer them like a 50 or 60% commission level, which is just ridiculous. And unfortunately, that's how these big shops work. They usually offer final expense and mortgage protection combined because they can get enough leads to do that, and they can offer that dream, you know, of building your own agency. We've got the leads, our process is the great. And generally what it is it's a bunch of horse crap. Trust me, I went through that. Then I ended up going back to the Hartford with my tail between my legs. I took my 60-point commission. Yeah, look, that's really low. The reason I took it was because the darn lead that we had was so good and that I knew I could sell with that lead. So here I ended up being a Hartford producer, a top 10 agents out of hundreds of agents, and I was making a measly $55,000 a year. Little did I know, in 2012, qualified for convention, I get this email saying, unfortunately, we're dropping our lead program and this Hartford product that you're selling. I thought it was the worst thing that could happen. Inadvertently, it was one of the best things that happened in our lives. So at that point, what I ended up doing was leaving the Hartford, had no choice. The lead was gone, the product wasn't there. The IMO that I was with was still trying to give me that 60% commission and buy leads for $50 each, and that's about what mortgage protection leads cost. So what I did was I was like, you know what, I can just go out on my own and do better. And that's what I did. I went out, I found contract levels around 100% and started hustling to sell mortgage protection. It was really hard. The products were different. Here I am trying to sell as an independent agent, offering better prices, but what I found out was that the leads weren't as good. You see, with mortgage protection, if you're not the first in, you're kind of screwed, because think about it. These folks, what they do is they're generally financially secure. They go out and purchase a mortgage, and then every mailing house in the country ends up sending them mail, so the next thing you know, you're competing with a bunch of agents in a market that's pretty tough. I mean, think about it. A lot of these people, they're financially secure, so the market itself, these people think they know what they're doing, whether they do or don't, and a lot of them, they do know what they're doing. So you're talking to doctors, you're talking to lawyers, you're talking to people that are actually already financially secure about mortgage protection life insurance. So it was really, really difficult. And I found myself doing the same thing, the same struggle, and actually making less money. So after doing that for just a few months, we started looking elsewhere. That's where we found Final Expense. At first, I was like, I don't know about this final expense thing. It's a little difficult. because, well, the people are different. They don't have money. They're basically low income folks that are just trying to get by in their retirement. So here we are trying to sell these folks insurance when they really don't have much money. But the difference is they actually need the insurance. So my experience right away, and let me say it this way. At first, I was actually trying to sell in the worst place in the country to sell final expense. If you don't realize there's good places for final expenses and really terrible places for final expense, and you don't know what those places are, and you're already selling final expense, there's a good chance your IMO or the company that you're working with is doing you a disservice. One of the things we do is we help our agents find the better places to sell to our market. So the idea is to target the final expense market of people that are most likely to buy, not just drop leads wherever, which is what most IMOs do. So when I first did get into final expense, we did kind of jump around a little bit. We had a hard time getting quality leads, didn't really know how to target the right market, got really bad advice on that. So basically, when we got into final expense, we still ended up having commissions that weren't so great. We had to go from IMO to IMO to try to get good leads. So here we are at like an 80% commission, paying top dollar for leads. Right at that time, it was $26 for direct mail leads. And meanwhile, getting bad advice during that time and minimal training. Nowadays, it's a lot easier to find IMOs that'll offer agents 100% or even higher and give you access to leads. I mean, any independent agent can actually find a mail house and pay for a 1,000-piece mail drop. They usually cost around $420 to $450 per 1,000. So you can drop your own mail and get your own leads. And even if you get a really bad return, you only get like 6 or 8 leads back, all you got to do is make a couple of sales to actually make some money. So in most cases, it's profitable. I mean, with us, the system we have a fixed cost lead. We offer those contracts starting over 100%. So we make it easier for any serious agent that's getting into final expense sales to be successful. And that's the whole thing. We try to make it as easy as humanly possible. We give you the higher contracts. We give you the good training. We've got killer leads. So think about this. If you're the type of personality who knows you know how to sell, and you've got that successful mentality, and you've got a little money saved, and you can actually afford to buy 30 or 40 leads a week, it's easy to make a 6-figure income at final expense sales. So why is that? Well, first of all, the market. We're dealing with low-income seniors that really need help. Instead of, with the mortgage protection market, you know, doctors and lawyers that think they know everything. So the low fixed income seniors are much easier to sell. I mean, it's night and day compared to the mortgage protection people. Another thing, mortgage protection, you're basically having to work with these people and their schedule. With final expense, it's daytime activity. You set the appointment at the time that's best for you. The prospects, what do they got? Doctor's appointments during the day. Most of them aren't working. So usually you're home at night by 7 o'clock, as to where with mortgage protection, you're running 8 o'clock, 9 o'clock appointments. Another thing is the leads. The leads are so much more available and so much better for final expense. With mortgage protection, you're getting leads of people that just bought a mortgage. Now, they're mailing out the card to you and then other cards. So now they're meeting with several agents, getting several quotes, and they're basically masters at tire kicking. So it's a tough industry. Final expense, they're seniors, they're like, what's this? Let me send out the card. The next thing you know, you're knocking on the door, making a presentation, finding the need, finding an amount of insurance that they can actually afford, and taking care of their needs. As far as sales that are easy, final expense is so much easier compared to mortgage protection. And now, if you're building your own insurance agency, you know, you want to recruit, there's nothing wrong with that. With final expense, it's a lot easier to earn your way at the top, as to where these mortgage protection companies, they start you so low, and then they tell you, oh, you can make 130, 140%, and it never happens. Nobody has that. It's usually BS. So with final expense, think about it. You're already starting high. So if you want to build an agency, if you want to recruit people, it's so much easier, because now even if you're training agents, and think about it, you can still offer them a lot better than 50, 60, 70% contracts. If you've been in the industry for at least a year, you can actually offer agents 100% commission or even higher. So let's talk about the sale. Mortgage protection products. First of all, a lot of times you're going to have to sell your prospect a fully underwritten product. But even the simplified underwritten products can be a bear. If the underwriter ends up doing a prescription check and sees something they don't like, the next thing you know, they're contacting the doctor and or requesting full medical records, or even changing that simplified underwritten product to a fully underwritten. The next thing you know, they're ordering blood tests. When you look at it from that perspective, mortgage protection's really a pain in the ass compared to final expense, where you close your sale, you get on the phone with the company, you do a quick point of sale interview. At the end of the interview, they tell you, congratulations, your client, Mr. Jones, has been approved. So now you're leaving your client's house knowing they've been approved. You don't have to do anything else. With some companies, you don't even have to send up an application. And the next thing you know, you got money in your checking account 2 days later. Nice. Here's one last thing to consider. Do you like renewals? With final expense, the renewals can be anywhere from 7 to as much as 12% in a year. That's pretty sweet compared to mortgage protection, which has no renewals. Every now and then you'll see a company that does offer a 1 or 2% renewal. Chances are they're overpriced, they're a pain in the neck to deal with, there's some type of negative issue about them, and that's part of why they offer that tiny little renewal. Guys, if you're interested in getting information about our final expense sales program, which includes some of the highest contracts in the industry, along with access to the very best direct mail leads program out there, email me at doug@ufesonline.com. Also, if you want to get a copy of those living will kits, you can go ahead and email me at the same place. Again, that's doug@ufesonline.com. Happy hunting!